Which energy drink is better, Celsius or is it Monster Energy? More importantly, which one is the better investment? Monster Beverage, which is up 387% in the last decade? Or is it Celsius, which is up 37%? Wait, did you see that? Now, I made this template so you can compare two stocks and you can do your own stock fight videos. Here we've got Monster versus Celsius. And by the way, if you want this template, just leave a comment saying like, oh my God, you're so handsome and so cool, and where could I get that template for free? And I'll tell you. Both Monster Energy and Celsius are in the 50s per share, but it is their 1, 5, and 10-year growth that's very different. Monster is up 7% in the last year, 97% in the last 5 years, and 387% in the last decade. And Celsius is up 59% in the last year, 4,297% in the last 5 years, and 38,000% in the last decade. That's significant. One other thing I'll note that isn't on this template, but you'll notice when you do your own research, is a company like Monster Beverage or Monster Energy has 1 billion shares on the market, and Celsius only has like 230 million or something like that. Let's go double check. Go on a website like Seeking Alpha, and under the summary page, you're just going to scroll down a little bit. And we're still scrolling, blah, blah, blah. After a while, we're going to get here to trading data, and you're going to see shares outstanding is 231 million. And this is for Monster Beverage or Monster Energy, it's 1 billion. So the more shares you have on the market, the harder it is to move the stock. Think of it like supply and demand. There's less shares of Celsius, therefore, if it's in demand, it can go up a lot. That was a weird sound. Monster Energy has a market cap of 57 billion and Celsius is only 12.25 billion. None of these companies pay dividends. And when we get to their price to earnings ratio, which compares the price of the stock to the company's earnings, we can see that one of them, Monster, is more in line with the industry average. It's a little overvalued, but 110 for Celsius, very overvalued. And when a stock is overvalued, it means like if they had bad earnings or something, the stock could fall dramatically. On the other hand, some people are willing to pay a little bit more because they think it's going to be more valuable in the future. We are already over 2 minutes on this video, and this is TikTok, where people have the attention span of a pigeon. So I'm going to move my head out of the way so you can take a screenshot in a second. Okay, I'm all the way up here now, but I'm going to still be here for your screenshot. Okay, finally down at the very bottom of the page, we can see their 1-year price target according to analysts. And remember, these 1-year price targets are not guarantees. They're like really, really deep dive guesstimates. And one other thing to note before you scroll on to the next dancing cat video is while you're doing this research, take a look at other things that might not even be on the template. Like here's an example. This is Celsius's net income, and you can see that it was at a loss, but then it was positive, almost 10 million, but then it started dropping again, 8.5 million, 3.94 million, and then in 2022, negative 187 million. All right, hit the follow and make sure you let me know in the comments which drink you prefer and which stock you prefer.